Hello, Mike Swanson of Wall Street Window here. If you would like this video so that I know that you're here. A lot of people are asking, when is the Nasdaq rally going to end? Like this video so that I know that you're here. A lot of people are asking, when is the Nasdaq? Sorry about that. The thing is that market predictions are made all the time. If you turn on CNBC at this moment, you're going to hear predictions. And I really don't make any of my own investing decisions based on people's predictions at all. I look at indicators and I look for trend changes in the market. So when the election occurred in November, the stock market began a huge rally. It was really a continuation of a rally that started in the first quarter of 2016. And now we're in an environment of very low volatility, and we're actually reaching an interesting moment for the market averages. Let me load a chart up and show you what I'm talking about. Okay, this is the Nasdaq, and the moment we're entering is we hit a high and had a pretty big reversal day on June the 9th, and we've come back up to that. The Dow made a minor new high, and yesterday's stuff faded just a little. So I actually think the question for the next couple of weeks is, can we break out again and have another move higher? Or is this really going to tip over into a drop in the fall? I actually think the latter is more likely. But again, I want to see the market confirm that, and not like just, I'm not trying to predict it to you, but show you what you need to know to look for, so you'll be able to recognize when the market is going to tip into a correction and when it starts. So if you look at this, you see three lines below the Nasdaq. You see the purple line, which is the 50-day moving average, the 150 and 200-day below it. What's obvious is that that purple line has been support since November, and we touched it briefly in December, in March, in April, and in May, and even this month. It has acted as a consistent support line. Whenever the stock market has fallen to that 50-day moving average, trading robots have come in and bought. Traders like you or me have come in to bought. However, at some point in time, that will fail, and the Nasdaq will go below that level, and then the trading robots will cut off. When I say go below it, I'm talking more, it's important to have a close below it, not just an intraday move, because you can fall below it just a little bit and people come in. But if you close below it, that sets up the stage where the robots turn off and people will say, well, let's see if it falls, I'm going to wait. And then it does. And then you'll see the Nasdaq go down to one of those lower moving averages. Right now, this is a stock market dominated not by people doing fundamental analysis, but by trading robots. Most individual investors are fully invested in the stock market, or they're using ETFs. And that means the actual intraday trading action is primarily being dominated by computer programs and trading robots. And that's why indicators such as the 50-day moving average are so important right now. So we're not in a position to break that today or tomorrow. But if we close below that 50-day moving average in July or August, you will then know that we're actually facing a correction. We haven't seen a correction in the markets now since January of 2016, and one is going to come. And what I'm showing you in this video is not to tell you, hey, let's predict it. No, let's look at what will trigger a correction. And then you can put, if you're already invested, you can put stop loss orders below those levels, or simply say, hey, I'm going to wait. And if the Nasdaq one day closes below that 50-day moving average, I'm going to take money off the table. That's really the prudent action, I think, for anyone invested in the stock market. So many people bought in the first quarter of this year as things were shooting up, chasing the rally without any plan. And when you buy stuff that has gone up so much without a correction for such a long period of time, you have got to have a plan on when you'll get out to take some profits or at least take some money off the table. Because in the real world of making money in the financial markets, whatever the market is, you make the most money by buying on dips and knowing how to spot long-term investment buy points, not just chasing something that's already up for months on end, which is what so many people have done this year. When most people, there's a flood of money that came in the first quarter. And if we dip below that 50-day moving average, we'll most likely see a correction that will make a lot of people that bought in the first quarter end up losing money, and then they'll sell, and that's what fuels corrections. People buying late into the game that don't have a plan and they suffer losses and sell. Those are really the people that cause market drops, frankly. But if we flip out and forget about the stock market, as I'm writing in my email updates, we've got great buy points for other markets, for gold, for mining stocks, because they went up substantially last year. The GDX went up 51%. And since the summer, though, of last year, they've had a corrective phase. It's corrective phases that give you dips and buy points, so you get in early before the next rally begins or right as it begins. Now, that's a great buying opportunity, and it doesn't require chasing something. And did a send out an email. I'm going to send out an email this morning showing the indicator that will signal to us when the next bull rally is really starting in gold and mining stocks, because we've seen rallies up to 1,300 for gold that have failed this year, but there will be one. I think it's going to be the next one, but either way, there will be an indicator that's going to tell us by flashing that the next rally is real, that has not flashed on any previous rally this year. And it's on the verge of flashing. And that's the big lesson I want you to take from this video, is understanding the markets and making decisions is not about predicting the future. It's understanding charts and technical analysis and recognizing when indicators flash trend changes. So with the Nasdaq, a close below the 50-day moving average will tell us that this straight up trend with no volatility that's been in place for the stock market is over. It's not flashing today. That's not happening today. But I think there's a good chance it will happen before the summer is over. At the same time, that GDX to GLD ratio, if that breaks out, we're starting a bull rally for gold stocks. And those are two hugely valuable things to know. And it's not about predicting the future. It's about watching what happens and adjusting and adapting and positioning yourself to not what you hope happens in the markets or what people are predicting is going to happen, but what is actually starting to happen. And that's the beginning of meaningful trends. And you've got to understand the signs and watch for them and so forth. So if you would, leave comments, give me your thoughts on what you think is happening in the markets, and subscribe to this YouTube channel, and I'll be talking with you later.